Hello, guys. Good morning. I am live. I am seeing myself here on my tablet. Yes, we're live. What's up, folks? Good morning. Good morning, Crystal. How are you guys doing today? Come on. It's time to rise and shine. Hello. Morning, folks. How was your Halloween? Good. Crystal, can you see me? You should be able to see me, huh? Yeah, everything is okay with our live stream. Welcome back. You'd better get accustomed to the fact that now you belong to a community that is doing, and that has been doing for that matter, weekend live streams during more than 4 years. This is important stuff, guys. And ideally, you should be participating so we can interact. You can ask me about the markets, about what zero DTE SPY option you should be buying on Monday as soon as the market opens and stuff like that. Yeah. Should I be grabbing Palantir out of the money calls on Monday before the report comes out? That kind of good stuff that sometimes you guys ask about. So good morning. We have a super busy week ahead of ourselves. Take a look at the earnings reports that are coming out. If you want to know the expected move of any of these stocks, let me know and drop a comment. There you go. Yeah, everything is good. I am at a random coffee, 3 blocks away from my place. Yeah, here in Charlotte. And once I am done streaming for you, I will be going live in Spanish. Yeah, I'm working more than before, but I like it. Yeah, I like hanging out with you guys. So that's good. Sure. And again, guys, these live streams are very important because they allow us to be on the same page for the upcoming week. Yeah, this is important. This is like the plan that you determine before a game. This is the plan. We're gonna be doing this and that and this and that, and this could be potentially happening on the upcoming week. So this is important. And if you cannot participate live, if you cannot see, if you cannot watch the live stream at noon on Saturdays or near noon on Saturdays, then you need to watch it later on. Take notes. Sure. Felicia just showed up. Awesome. So guys, I have an hour for you. I am going to be live until 12 p.m. because then I have to go live in Spanish. I have a lot of information to share with you. So if you have any questions about stocks, and I guess that many of you will be asking about Meta, if you have any questions about the markets or any topic in particular, let me know. And in the meantime, I will start providing you with the information that I've prepared for this live stream. So first of all, we need to take a look at the S&P 500 and what happened this week. At this point in time, guys, I think that should be the case for every single one of the members of our Discord and Patreon and community, that every single one of you is aware of the fact that the SPY tracks the S&P 500. I am sure, 1,000,000% sure, that there are a lot of people out there that are actively trading the SPY, the ETF of the S&P 500, and they don't know that this gentleman over here exists. This is the SPX, the cash index of the S&P 500. Let me move my camera down here. Yeah, I think that here is gonna be better. Okay, this guy here. This is the SPX, the cash index of the S&P 500. So, in order to make trading decisions, in my case, I look at both indices. The S&P 500 or the SPX is the same thing, pretty much. This is a cash index, and the SPY. This is very, very important. And you guys have seen on a real-time basis how we trade the SPY, basing our decisions on whatever the SPX is showing us. But I guess that every single one of you is aware of that, okay? So good. This is a 4-hour chart of the SPX. I can pull up a 4-hour chart of the SPY. I mean, for simplicity purposes. Look, SPY. Is there something wrong with the SPY as of now? Of course not. I mean, we closed yesterday's session below the 5 DMA. We cannot make a federal case out of that. Is it positive? No, it isn't positive. It is not positive. There's a little bit of technical damage in the SPY, but we cannot go all in put options because the SPY closed below the 5 DMA. All right. Other than that, take a look. If we zoom out, this is a clear uptrend above all the moving averages except for the 5 DMA. So ideally, if the bulls want to keep going up on Monday, they need to recapture the 5 DMA that as of now is signaling $684. So nothing bearish or very bearish, I would say, over here. This is just awareness stuff so far. We closed below the 5 DMA. Say that the SPY, sorry guys, let me push my share a bit forward. So say that we pull back a bit more, maybe the 20 DMA could be providing support, $671. This is pretty much an upward sloping 20-day moving average. So if we happen to visit this level, 671, yeah, this is a potential spot from which the bulls could be bouncing back up. But again, you don't need, and this is something that you guys know, you don't need to worry. You don't need to be worried about the SPY because you're being provided the levels of interest on a daily basis in our Discord, in the live Alberto channel. So, the SPY, you shouldn't be losing sleep over because of the SPY. Let's just put it that way. If we take a look at what happened during the week with the 11 sectors that trade inside the S&P 500, and every single one of you should be already aware of the fact that inside the S&P 500 we have 11 sectors. This is critical, absolutely critical. If you consider yourself an active participant in the markets, you need to know to the penny the 11 sectors that trade inside the S&P 500. This is very important information. I am 1,000,000% sure that there are a lot of market participants out there that have no clue about this. No clue. And this is super important. So, if we take a peek at what happened during the week on the 11 sectors that trade inside the S&P 500, we can tell that this week was a week with a very negative breadth. It was. Look, technology up 2.42%. Consumer discretionary, inside technology, what stocks are we talking about? Microsoft, Apple, Nvidia, go figure. So, consumer discretionary up 0.96%. Then we have industrials, 0.10%. And aside from industrials, take a look at this disaster, guys. Real estate down 4%. Ugly, ugly, ugly. And this is a very sensitive sector relative to what? Relative to interest rates. And we'll talk about that in just a second. Materials down 3.75%. Consumer staples down 3.55%. Utilities down 2.51%. Financials, another very sensitive sector relative to interest rates, down 1.39%. Healthcare down 1.22%. Communication services down 0.64%. In the case of communication services, this is very interesting, guys. Again, down 0.64% during the week, because the two most important holdings inside that sector are obviously Meta and Google. Google went up after having reported better than expected. Meta also reported way better than expected, but the guidance that they provided on capex, on capital expenditures, was too aggressive, and the markets didn't like it. And we can talk about that a bit more. We can talk about that further when we talk about Meta, because I think that we'll, at some point during the live stream, we'll end up speaking about Meta. In energy went up a bit, only 0.7%. So the outperformance of the tech sector. So you will listen to a lot of bears out there saying, "Oh, this is very negative for the markets and the SPY, and this is a leading indicator. The breadth is deteriorating and we're going lower and whatever. So what really happened here, guys, during the week, like for real, is that the earnings reports of Microsoft, Meta, and Google ended up benefiting a lot the AI narrative. All of those companies, all of them, I mean, the companies that have reported so far, Tesla, Google, Microsoft, and Meta. No, I mean, Apple is not investing a lot of money yet in AI, but when it comes to Microsoft, Google, and Meta, they send us a very clear message. The AI party isn't ending anytime soon. Who is the largest beneficiary of the AI investment so far? That could change eventually. It might change eventually. You never know, right? But of course, the largest beneficiary of that dynamic is NVIDIA. Period, full stop. So the super outperformance of the tech sector is logical. And of course, since NVIDIA is the largest company of the world, from a market cap standpoint, the fact that we had a lot of money chasing NVIDIA ended up affecting in a negative way the other components of the S&P 500. So what happened this week, despite the fact that we can obviously make a case that is negative from a breadth standpoint, is some way, somehow logical. The big winner of the earnings reports of the big tech companies that we got this week was NVIDIA. So the markets did what they were supposed to do. They started to chase NVIDIA once again. Can we make a bearish case out of this? Yeah, maybe. What happens if we see profit taken in the case of NVIDIA? So for the most part, the S&P 500 has been following whatever NVIDIA does. You cannot take a trade, guys, with the SPY without keeping an eye on NVIDIA. This is a new, it's like a new denominator. It's like a new, say, a guide for us to make any trading decision on the SPY. Unbelievable. The ultra concentration that we are seeing in a few stocks, and more specifically in regard to NVIDIA, is impressive. But the breadth has been deteriorating, and whenever you want to check on the general breadth of the markets, you have to take a look at the RSP. This is the equal weight of the S&P 500. Take a look. RSP. Equal weight of the S&P 500. Take a look at how the RSP looks different relative to the S&P or relative to the SPY. Take a look. It is trading below the 5 and the 20-day moving average, $189, and it also lost the 50-day moving average to the downside. So if you want to do something new on the upcoming week, keep an eye on the RSP. Say that this gentleman breaks the 100-day moving average to the downside. It's negative. For the markets as a whole, we can keep going up with the RSP going down, as long as NVIDIA and Microsoft and Apple do the heavy lifting. Did anyone know about this guy over here, the RSP, the equal weight of the S&P 500? Because obviously, guys, the idea of these weekend live streams is having you learn new stuff. Sorry, guys. So the RSP. Now, and circling back to the sectors, real estate down 4%. Ugly for real estate stocks. In financials going down 1.39%. Now, what is going on when it comes to the expectations of the markets about interest rate cuts? Let's go take a look. Take a look at how the possibility of a situation in which the Fed might not cut rates in December, on the upcoming meeting of December, which will take place on December 10th, correct, has been rising. This is the reason why the financial sector got hit and also the real estate sector got hit. Very simple. Now, what index is very susceptible to the perception of the markets about interest rates? What about the IWM? So keep an eye on the IWM. So if during the upcoming week the expectation of the markets for the Fed to don't cut interest rates in December keeps rising, this is bad news for the IWM. We could see downwards pressure on the IWM, higher multiple stocks, financial stocks, needless to say, real estate stocks. And in the case of the IWM, which is an ETF that many of you guys like to trade, keep an eye on the 50-day moving average, $242. It is an important level to keep an eye on. In my opinion, and I am not getting in a macroeconomic discussion here. I think the Fed is cutting rates in December. Yeah, because the government is lying about the inflation data. They have always done it, but this time around, the situation has gotten worse. Yeah. Kevin Hassett, an advisor to the White House, said 1 month and a half ago, pretty much I think, or 2 months ago, that they needed an ally inside the Bureau of Labor Statistics. An ally. Unbelievable, guys. Unbelievable stuff. Third world stuff. So we are not getting any economic data as of now because of the shutdown of the government. But whenever the shutdown of the government ends, and once again we start getting the macroeconomic data, I am sure. I should never speak in absolute terms, but I am very confident. I would say 95% confident about the fact that the official figures about inflation will keep going down, which is a lie. Who on its right mind believes that inflation on a year-over-year basis is at 3%, guys? Come on. Give me a fucking break. It's bullshit. It's all fake data. It's all cooked data. So, in my opinion, and again, I am not getting into a macroeconomic discussion here. If this thing keeps rising, we're getting a CPI data report. I don't know, maybe the CPI data report of November. We could get it before the upcoming meeting. Yeah, it's on the 10th. And that CPI is going to come out pristine. Oh, inflation is going down so much. Oh, yeah. Tariffs are not inflationary and stuff like that. So, in my opinion, this is not something to be really worried about, but I am saying this because I know that many of you love trading higher multiple stocks. You guys love ACLO, and you guys love Joby Aviation, and you guys love what other higher multiple stock can I mention? Joby. Market Aviation and ACLO and I don't know, and Open Door and so forth. So if the markets, or let's say that if the concern of the markets about the Fed maybe not cutting rates in December keeps rising, those stocks are very susceptible to interest rates. Because all of those companies that I just mentioned are, speculative companies. They don't make any money, so they rely a lot on credit, right? So if that is the case, we could see a process in which maybe the markets hold up, and I have some interesting stats to show you, but higher multiple stocks could remain under pressure. So that is awareness stuff, and that is something to keep an eye on. Do you have any questions about this? Is everything that I said understandable? Yeah, we can move on. That being said, take a look at the information that we should be getting, or take a look at the information that should be released if the federal government weren't shut down, right? So let me see. On Friday, we should be getting the jobs report of October. Big deal. It's a big deal. Are we getting the jobs report? Of course not. No. I mean, unless, I don't know, the government opens. I don't know. Who knows? I mean, this is a so if we get the jobs report for any reason, I don't know. Maybe they decide to release it. I don't know, or maybe they get to an agreement and the Federal opens back up. You never know. If that is the case, this could be a very big market mover, of course. But we don't know if this report will even be released, so we don't need to worry about it. We have a lot of Fed zombies speaking during the week. So Mary Daly, Lisa Cook, whatever, Waller, Paulson, whatever. So for the most part, guys, the only macroeconomic data report that will be released for sure during the week is going to be the ADP employment change. So this is a gauge of the labor market from the private sector. And let's say this report is released by a private company, which is ADP. So this report will be released regardless of whatever is going on with the government. And this report is coming out on Wednesday at 8:15 a.m. So the previous report came out negative, reflecting minus 32,000 jobs. And this time around, this report is expected at 25,000. Could this be a market mover pre-market? It could be. Say that this report comes way above estimates. The markets could be a bit worried about the fact that, the labor market is not as weak as Powell thinks. So maybe he's not cutting rates in December and stuff like that. And again, guys, you need to understand that the markets are drug addicts. This is very basic concept that you need to understand, super basic concept about the way that the markets work. So again, it's like a drug addict. What is the drug of the stock market? Lower rates. Easy money. They don't care about anything else, guys. Anything. Zero. As long as we have lower interest rates, and especially if nothing wrong happens with the economy as a whole, we're going higher. So this matters a lot. And of course, there are some sectors that are way more susceptible to interest rates than others. But in general terms, the stock market is a drug addict. Do what? Do cheap money. Do easy money. So this is important information that you need to keep in mind. So for the most part, the only macroeconomic report that is coming out this week would be the ADP employment change. Could it be a market mover? Yeah, who knows? I mean, if this were a regular week, we would be having the JOLTS report. I mean, a regular week from a government shutdown standpoint, of course, right? Which is still going on. We should be getting the JOLTS report, the JOLTS job openings on Tuesday. The ADP, that report is coming out, and on Friday the jobs report. So other than that, there's nothing very meaningful to say about the week, about the upcoming week from a macro data standpoint. Okay, any questions about this? We good? Are we good? That being said, guys, please, especially to the new members of our Patreon out there. So on Patreon, you have the weekly recap of the unusual options alerts that were reported, that were notified to you guys during the week from October 20th up to October the 24th. Take a look at these, guys. The overall accuracy of these alerts was 76%. So what's the idea of us showing you guys this information? That ideally, and if you want to make money out of this business, you should be reconciling this information with the corresponding technical charts. This is what you guys should be doing. For instance, take a look at one of the alerts that we got last week, unusual collapsion alert. Take a look at this. Let me see if I can see it here. Because we got, if I remember correctly, we got an alert of Amazon. Take a look. On October the 22nd, Wednesday, October 22nd, you guys were notified about this unusual collapsion alert. So the day before, someone invested $1.7 million on Amazon calls expiring on December 19th. Amazon went up since this alert was notified. Take a look at this, 14%. How do you evaluate these alerts? Let me take a look at a technical chart of Amazon, AMZN. You pull up the technical chart, you take a look at the date of the alert, or at the date that the alert was notified. This was on October 22nd. Okay, so let's go see. Let me pull up here a 1 hour chart of Amazon, October 22nd. What is it at? So the alert was notified here, guys. Here. Take a look at what happened with Amazon since you guys got the alert. So October 22nd occurred. It was 22nd or 23rd? 22nd, okay. So hold, let me zoom out a bit more. Okay, 22nd, what is it at? The alert that you guys got was here. From here. This was the performance of the stock, guys, since you got the alert. How could you lose money with this alert? It was impossible. I mean, Amazon went down that day only, let me see, 0.80%. And after that, the stock took off. Needless to say, after the earnings report came out this week. So take a look at this. So when you reconcile the information of our unusual options alerts relative to the technical charts, you can review what you're doing, either right or wrong, when you are provided with this information. So that's the idea. That's why we make an effort, let's just put it that way, to let you guys know this information. Let's take a look at another alert, successful alert. Take a look at this, APLD. So on the same day, Wednesday the 22nd, you were notified that the day before someone invested, this was obviously an institution, $880,000 on call options expiring on January 16th with a strike of $40. This is a super bullish bet on APLD. Super bullish bet. APLD went up 11% since this alert was notified. So since you guys are being provided this information on a daily basis, you should be, again, reconciling this information with the technical charts, so you can have a better understanding about how to trade, about how to make the most of these unusual options alerts. And I can keep going here, guys. For instance, we had a call option alert on ACLO on October the 24th. Take a look. They were buying the dip, the options. $810,000 on call options expiring on December 19th. Strike $150. ACLO went up during the next 4 trading sessions, $18. And if you still have like further doubts about how to evaluate the alerts, here you have the explanation on the same post that is available on Patreon. So go ahead and take a look. And remember, for the new members of our community, that this information is available for you here. Look, in our Discord, we have a channel, Unusual Alerts. This information is posted on a daily basis. I know that many of you are making most of your trading decisions based on the alerts. This is very valuable information that you're being provided on a daily basis. And if you have any questions, I will give you a call. No, I'm kidding. If you have any questions, please let me know, okay? All right. Can we keep going? We good? We are, let me see, 32 minutes in. Okay, guys. So aside from the macroeconomic data that will be released or not be released during the upcoming week, the month of November is about to kick off. And I have some interesting stats that I want to share with you. So, the S&P 500 has been going up during 6 months in a row. It's a lot. We had a very special situation this week because of the Liberation Day. which I prefer to call the embarrassment day, but whatever. That's a topic for a different discussion. So we had a very specific situation this year because the markets dropped 20%, or the S&P 500 went down 10% in a very aggressive fashion, and then we had a massive V-shaped recovery. So most of you guys know that. But aside from that, take a look at these stats, guys. This is very interesting information. Look, because again, you will be watching a lot of YouTubers saying, "Oh, the S&P 500 has gone up during 6 months in a row, and the S&P cannot keep going up." Is that actually the case? Check this out. Another clue to expect a strong year-end rally. So this is the S&P 500 performance after having a positive month in May, June, July, August, September, and October. 6 months in a row is a lot. But again, we had a very specific situation this year, but whatever. So this rarely ever happens. It isn't very common. Seeing a situation in which the S&P 500 goes up during 6 months in a row. Okay, so this happened. This, I would say, weird situation, let's just put it that way, occurred in 1958, 1980, 2017, and this year. Take a look. So you have the returns per month. Let me pick a green color. I don't want to upset the bulls. Okay, and take a look at what happened in 1958, 1980, and 2018. Once the S&P 500 went up during 6 months in a row, November was positive 100% of the time. December up on average 1%, and the period, or the 2 months between November and December, up 100% of the time. So does this imply that we are going to be buying calls of the SPY expiring on December 31st based on this information? Of course not. Of course not. We need to make our trading decisions based on the technical charts in front of us. But this is interesting stuff, guys. Yeah, don't be mistaken by the fact that the SPY went up 6 months in a row. We can't keep going up. Yeah. All right, let's keep going. So, screenshot here, snipping tool. All right, there you go. So, look at this. Okay, more clues. November and December could be strong. Take a look at this information, guys. So, these are the S&P 500 returns. Sorry, guys.
Okay, a couple more bites and then we're gonna go bye-bye.
Okay, there you go. Okay, so whenever the S&P 500 closed the end of October, being up year to date more than 15%, which is like more common relative to the previous stat that I showed you. Take a look at this. This situation occurred in 1950, 1955, 1967. You can take a screenshot of this information and take a look yourselves. Look at this. November positive 81% of the time. So again, the S&P 500 is up year to date more than 15%, right? We are on the same page here. You guys are following me. If you didn't understand anything, please let me know. So when that situation happened, and that situation has occurred on multiple occasions, as you guys can see here, 1950, 1954, 1963, 1989, 2003, 2017, November was positive 81% of the time. December positive 71% of the time. And the last 2 months of the year combined up 95% of the time. It's bullish. So that implies, guys, for the most part, that the net aggregate opinion of the markets is seeing way more positive things coming up than negatives. What is the most important positive thing that the markets are visualizing as of now into the future? What is it? I just told you guys, come on, give me an answer. What is it? What the markets are excited about? Come on, Steven, Glenda, Felicia. You guys falling asleep? Come on. What is it? I just mentioned that. Interest rates. Yeah. Yeah, of course. Interest rates. 100%. They're a drug. The stock market is a drug addict. Give me my cocaine, Mr. Powell. And I hate that word. I know that is a very ugly word, but that is what is going on. Interest rates are the cocaine of the stock market. So this is we are dealing, guys, with a cocaine addict. The more cocaine they see, the higher they go. If nothing wrong is going on with the economy. Yeah, sure, 100%. All right, let's keep going. More stats. Are you falling asleep? Is this interesting stuff? It is interesting stuff, I guess. Yeah. Okay, let's keep going here. So, take a look at the returns of the S&P 500 after the 10 strongest period between May and October, from 1950 up to 2024. Guess what, guys? Take a look at this. Sell in May, return in May. So take a look at these returns from, again, May up to October. We just had, guys, the best period between May and October ever. The S&P 500 is up from May until October of this year, 22%. Unbelievable. But again, we had a very special market situation in April with the Liberation Embarrassment Day. We had a big drop, and now we had a massive V-shaped recovery. So in April, guys, with the tariffs that were initially announced, Donald Trump was inserting a nuclear bomb into the world economy. Let's try to think about this from a logical standpoint. A nuclear bomb was inserted into the world economy in April. If those tariffs that were initially announced were still in place, the world could be in jeopardy of an economic depression, because we are the first economy of the world. And the same nuclear bomb that was activated in early April was deactivated a bit after that. That's why we had such an impressive recovery from the April low. It's logical. What happened is logical. And therefore, take a look at this. This is impressive, guys. The best period from May into October ever. But now the question, speaking of the future. So, what's the average return when this happened before, and it never happened the way that it happened this year? What was the return, the average return of the S&P 500 from November until April of the next year? Take a look at this. A median return of 13.5%. So, this stat is even more bullish. This stat is even more bullish. Let's keep going, guys. I don't want anyone to fall asleep here. Let's keep going. There you go. All right. So take a look at this. And again, guys, and I should have said this before, but I'm going to say it now. When it comes to statistical information, you need to understand that they show us what could be potentially happening in the future based on the past. Correct? But if the markets are surprised by an event that they were not waiting for, you can get the statistical information or these stats and, throw it away. Directly to the trash can. All right? We're talking about the past, letting us know what could be potentially happening in the future. All right? Otherwise, taking a look at this information, we all should be buying SPY calls on Monday, right? At the market open. That isn't the case, okay? All right. So, usually, the period between November and April of the upcoming year is a very solid period for the market. So take a look at this. So from November until April of the next year, the S&P 500 has been higher 76% of the time on average. And take a look at the worst. This is very impressive, guys. Take a look at the worst period of the month at the worst period of the year for the markets on average. From May until October, bro, or guys. And since, of course, we are, dealing with a massive secular bull market, the return is even positive. But the worst period of the year for the markets usually takes place from May until October, in which case the S&P 500 has been up only 65% of the time. And we just had the best period ever from May leading into October. Unbelievable, guys. It's been a crazy year, that's for sure. But this stat is letting us know that the fact that we are starting November after having had a very solid performance from May until October is bullish. Why? Because the S&P 500 has gone up from November until April of the upcoming year, has been up 76% of the time. Can I keep going? Let's keep going. All right, here it is. Take a look. So the S&P went down in October, guys. Look at this. In 2023 and 2024. So we just had the first positive October in 3 years. So that implies that in a month in which the markets were experiencing weakness, this time around they showed strength, which is bullish. Again, it all comes down, guys, to the net aggregate opinion. It all comes down to the net aggregate opinion of the markets. That's it. That's what it is. So the vast majority of market participants are seeing way more positive things than negative things. That's it. Can they be mistaken? Of course. They've been mistaken before. But this is bullish. And this is a very basic concept, that you need to get familiar with. The net aggregate opinion of the markets. In other words, what the vast majority of market participants are thinking about. And let's keep going. What do we get here? Take a look. So, 6 months win streaks. Oh, sorry, guys. Here's the situation, guys. On Saturdays, I get out of my studio because I spend too many hours in my studio from Mondays through Fridays, and I come to this coffee shop that is like 3 blocks away from my place, and of course, I am sitting on a small table. It's a bit uncomfortable, but at least I am surrounded by human beings. So, yeah. At times I struggle doing some stuff that I would be doing very easily in my place, but I need to get out of my place, guys. So, the returns of the S&P 500 after 6 months of a winning streak. Again, we just finished a 6-month winning streak, right? Okay. So, take a look at this. Because again, many people say, no, but 6 months, this is too much. What about 1954? We had an 11 winning streak, guys, in 1954. Take a look at this. What about at 1964? 8. Oh, my bad, guys. Sorry. Let me pick a pen here. There you go. 8. What about 2017? 10. 10 months in a row going up. And mind you, guys, as traders, we actually don't want to see this occurring. Why is it? Because for the most part, the markets go up taking advantage of low volume. That's what we call a melt-up operation. So the most important holdings inside the S&P 500 doing the heavy lifting, and the market's rising slowly but surely. And that usually occurs in periods of low volatility. The VIX goes down, and that represents fewer trading opportunities for us as traders. You have to be very accurate picking the stocks that could be going up. You see what I'm saying? So, can the SPY keep going up? Led by a few stocks? Of course it can. Take a look. 2017, 10 months in a row going up. But specifically, so here we can see what happened on average with the S&P 500 once the S&P went up during 6 months in a row. Look, the next month up on average 2%. In the next 3 months, 4% up. And take a look at this. So up 3 months out, 81% of the time, up 77% on average during the next 6 months. And take a look at these guys. 1 year out, up 81% of the time, with an average return of 9.8%. It's bullish, and I think that whenever the government releases inflation data, I have a high degree of confidence that data will be showing that inflation is going down, and we all know it isn't going down, but the official data is gonna be reflecting that, and that will allow the Fed to keep cutting rates. Okay, take a look at this. If you are surprised about the fact that the S&P has been going up during 6 months in a row, what about the Nasdaq 100? What ETF, guys, let me ask you, tracks the Nasdaq 100? What do you think? I am sure, guys, but massively sure that there are a lot of market participants out there that are actively trading the ETF of this gentleman right here, and they don't have a clue about what is that ETF tracking. Yeah, the Qs, correct. The Qs is an ETF. The triple Q is an ETF of the Nasdaq 100, correct. So in the case of the Nasdaq 100, this gets like more interesting. Why is it? Because the Nasdaq 100 or the Qs, the triple Q, has been going up for 7 months in a row. Even more than relative to the SPY, right? So that's an interesting thing. But so this doesn't happen like very often. 1986, 1995, 2003, 2009, 2017. So 1 month after that happened, on average, the Qs or the triple Q has gone down, on average 1.44%. So from strict statistical standpoint, the Nasdaq 100 could be going down in November, or the triple Q. Does this imply that we should be getting out of the money put options expiring in early December of the Qs? Of course not. Again, this is information that shows us what happened in the past, but that doesn't guarantee that this will happen in the future. That's it. But yes, this stat is letting us know that the likelihood for the Qs to have a red month, a negative month, is high. And of course, guys, if Nvidia and Microsoft and Apple go down, the SPY will likely go down as well, because of the weight that those stocks have inside the S&P 500. This is interesting stuff. Let's just put it that way. Isn't it? It is interesting, in my opinion. All right, so aside from, okay, take a look. Interesting. The first 5 trading sessions, guys, of November are very, very bullish. Very bullish for both the Russell 2000 or the IWM and the S&P 500. This is like super bullish. So look at this. From the year 2000 until 2024, the S&P 500 has gone up almost 3%. So in 2024, and you can, I mean, we can make an average here. Take a look. I mean, there are some exceptions to the rule. Take a look, like 2007. Go figure. The S&P went down 2.7% during the first 5 days of November. But 2024 up 2.8%, massive rally. 2023 3%, massive rally. 2022 0.3%. This was that occurred in the midst of a bear market, so there was a relief rally. 2021 up 3.4% during the first 5 days of November, guys. Unbelievable. Crazy. 2018 up 5.9%. The first 5 days of November are very, very bullish. Very bullish. And in the case of the Russell 2000, take a look. 2024 up 7%, guys. In 5 trading sessions. Jesus Christ. Unbelievable. Unbelievable stuff, guys. 2023, Russell 2000 up 3.2%. 2021, 6%. So the week that starts on Monday is usually very bullish. We'll see about that. Does this imply that we're getting out of the money calls of the Russell expiring on Friday? Of course not. We don't know if this will actually happen this time around, right? So there you go. Okay, guys, any questions? Because we're running out of time here. 54 minutes. So remember that now in our Discord we have we have a channel for the expected moves, I think, right? There you go. Here, look at this. So we have a super packed week when it comes to earnings report. Take a look. What is my earnings report? Take a look. So we have Uber, AMD, IonQ, Arista Networks, of course, Palantir reports on Monday. I can show you guys the expected move and stuff. Open Door reports, McDonald's, Humana, IonQ, I just mentioned it, and ARM Holdings, Upstart. If you have any questions about any of the expected moves of these stocks, let us know in the main chat during the trading sessions. Of course, let us know here. What is the main chat? I lost it. Here it is. We'll let you know right away, either Naka or myself. In the case of Palantir, boo! Take a look at this. So the expectations are very high. I know that all of you want to know about Palantir. Expectations are super high. Palantir just made a brand new all-time highs on Friday. Let me show you what. So take a look at the expected move. It is 11%. The implied volatility has been going up, of course, because the company reports on Monday. This company has been literally, literally killing it. And I don't think, and especially taking into account the earnings reports that just came out from Meta and Google and Microsoft, I don't think they will report worse than expected. It is, I would say, extremely unlikely, guys. The demand for artificial intelligence is absolutely out of control. So, in the case of the earnings whisper subs, 63% of them believe that Palantir will beat on at least top and bottom line, revenue and EPS. And take a look at how the expectation for a positive response to take place is lower relative to the expectations about the report itself. So only 52% of the earnings whisper subs believe that Palantir will be going up. Yeah, that's an original Palantir shirt. Yeah, that a member of our Patreon in Spanish sent to me. Yeah, made in America. It is $60. Unbelievable. So a 10% move. Let me see. 10%. We're talking about a $17 expected move. So the expectation is very high, guys. If I had to if I had to guess, I would say that the stock goes down, but the dip gets put up. Take a look at these guys, just to show you something. Because of course, I mean, I don't like the valuation of this company. I cannot wrap my head around the valuation of Palantir. I just can't. Like, so many good news have been already priced into the stock that, I mean, I cannot justify the multiples. Take a look at this. This company trades at 270 times forward earnings. Unbelievable. 270 times forward earnings. The price to sales has to be at what? What's the price to sales of Palantir? Let me see. Let me see. We have a price to sales of how much? 100 and is it? No, hold. What is it? Let me see. And we need to do another workshop, guys, about financial analysis. You guys know that I love financial analysis. Take a look at the price to sales. 137. This company has a market capitalization of $443 billion that equals 130 times its trailing revenue, guys. It's 12-month trailing revenue. So, in other words, whoever is paying Palantir $200 a share today is paying $137 per every dollar of revenue that this company makes. It's excessive. It's insane. So the bar is very, very, very high for Palantir. But take a look at these guys. I don't think I never ever before saw something like this. Take a look at the revenue growth year over year, guys. On Q2 of 2025, this company reported a year over year revenue growth of 48%. Unbelievable. Take a look at the revenue of Palantir, guys. Unbelievable. It's a stairway. Every single report reflects way more growth relative to the previous one. And get these guys. 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters in a row reflecting year over year revenue growth. I never saw something like this before. Never. This is absolutely unprecedented. Unbelievable. So the valuation is very high. We have an expected move of $17. The stock goes down, the dip gets put up. Needless to say, guys, after we knew about so this week, guys, I would say that the most important market event that took place this week is that we got an update about what the demand for artificial intelligence is looking like. It is ultra strong. Ultra strong. This dip gets put up, guys. If it happens to go down, I don't know. I mean, the bar is very high. That's all I can say. So don't buy options, of course. The implied volatility is very high. Remember, if you buy options ahead of an earnings report, you need the expected move to be exceeded so you can make money out of it. Because once a company reports earnings, we have the phenomenon of the IV crush. A very aggressive decrease on the implied volatility. So you don't need to do it, of course. And yeah, guys. So I think that we all are on the same page for the upcoming week. Remember, if you have any questions about the expected moves or the earnings reports that are coming out, let us know in the main chat in the Discord. And yeah, that's a wrap, guys. Thank you. I'm about to go live in Spanish, so yeah. Any last minute question here? Oops, sorry. Did you like it? Live from Charlotte in North Carolina. Yeah. Yeah, let's stay in touch in the Discord, guys. Thank you. Glenda, there you go. And guys, you didn't ask about Meta. Yeah, let's address the elephant in the room. Meta. The earnings report was amazing, unbelievable. I love the company. The technical chart is looking extremely, extremely bad. we'd better wait until buyers show strength. Say they recapture 662, or even better, if they recapture the 200-day moving average. I actually told the guys of Chris Saint's Discord about waiting until buyers show strength. We closed below 652, which was last Thursday's low. So let's wait until buyers show up. I think this is a buy the dip opportunity at some point, but the chart looks extremely crappy. We have to be careful here, guys. If you like Meta, from a long-term standpoint, that's a whole different story. We can evaluate other aspects of the company, right? Mm-hmm. Can you please check on the market structure of Meta? I can do it quickly before I wrap it up. Sure. Let me see. Meta. Meta. What is it? Mm-hmm. Yeah, take a look. Not a good one. Not a good one. Look, the demand is going down and the supply is rising. So, guys, again, there's a lot of valuation support when it comes to the stock. So the company is killing it. They up-guided on capex, on capital expenditures. The markets didn't like that because Meta doesn't have as much money in free cash flow relative to Microsoft and Google. And that's good. I mean, it's okay. The valuation is extremely attractive at the current levels, unless you are a bear. Unless you believe that the demand for Meta services is going down and stuff like that, that's a different situation, right? But there's a lot of valuation support here, and if the stock keeps going down, value investors will be picking it up sooner than you think, in my opinion, more likely than not. So, again, from a technical standpoint, because I know that most of you guys want to buy calls that expire 1 month out or 2 months out. So that is not the ideal setup for Meta as of now. If you like the company and you believe that you missed out on I don't know, on the AI rally in the markets and stuff like that, this could be an opportunity to hop in the train. But so from a long-term standpoint, I think that there is a lot of value in the company, and we have to do another workshop about financial analysis anytime soon. But from a trading standpoint, you have to be careful. We need to wait until buyers step in here. Yeah, and of course, yeah, we can also say that this push to the downside is a bit extended. I don't know, for someone that uses the relative strength index, they could argue that the stock is oversold. I don't like those terms. I don't like the term oversold. I don't like the term overbought, because I don't like him. I mean, it's just a personal preference, I guess. This push to the downside is extended for sure, but be careful, okay? And if you think that Meta is the future, bro, I mean, that's a different situation. Yeah, there's a lot of valuation support here. What a company, guys. So, guys, I'm going live in Spanish, sorry. Take care. You guys have a great weekend. And let's go Blue Jays tonight. I lost a lot of money last night with Toronto. But tonight, revenge trading. All in the Blue Jays. All in. Tonight, I have a revenge trading. Yeah. And I'm going to be winning big time. Bye, guys. You guys have a great Saturday. Take care. See you in the Discord. Take care. No revenge trading. No, but I'm talking about gambling. I'm talking about sports gambling. I never do any revenge trading. Yeah. But tonight, oh yeah, revenge trading. Against the Dodgers. Big time. Take care, guys.